I'm Joe, and by the end of this video, you'll see why Trump might be the big bad wolf, but China might have a brick house. Welcome back to Joe's Not Worried About It, where we turn market panic into profit, the huff and the puff. Every few months, there's a new big bad wolf. There's a trade war, a policy tweet, an election tantrum, a headline panic, King's March, and like clockwork, the market flinches, volatility spikes, and the media loses its mind. But here's what most people don't understand. Markets are built like brick houses. They bend, creak, and shudder, but no, they don't get blown down. Let's talk about 2025. Remember what happened in April? Tariff shock hits, global markets dropped. The VIX, they spiked. Everyone called it the next 2018. But a few days later, the Trump administration paused further escalation. Markets completely bounced back, and the panic was over. It's not just one coincidence after another, it's a complete predictable pattern, and we call it the brick house rule. This is the stat that keeps me sleeping well at night, because you know I need my sleep. Every year, the S&P 500 has dropped about 20% and then rallied to new highs. There has never been another 10% drop in that same calendar year, ever. Hasn't happened. 2025 already had that dip, and it already did that bounce. So what now? The odds of another 10% correction are slim, because the market's already absorbed the shock. What that means is that buyers kind of are looking for these discounts, and sellers, they kind of know what's happening. So when the market does dip a little bit, buyers step up to the plate almost immediately. Volatility does not equate to collapse. And here's the mistake that people are making. They see a VIX spike and they think the house is burning down, but in reality, it's giving you an opportunity. Volatility is just a repricing mechanism, not a structural failure. It happens when the market doesn't know what to believe yet. Once policy direction becomes clear, a pause, reversal, or a deal, the panic fades. And this is why institutions don't panic. You think you're scared? Goldman Sachs pulled back risk exposure before the tariffs hit. Hedge funds trimmed leverage weeks in advance. Circuit breakers are in place in case things really go sideways. They'll just pull the plug on the markets. The pros know the rules of this game. Don't run when the wolf huffs. Just check the foundation and make sure you got cash to buy what you like, because the wolf is always coming. He's always loud. But if you've built with bricks, aka good assets, strong allocations, or long-term outlooks, he won't blow your house down. So don't panic when the headline screams. Panic is the enemy of your profits. And volatility is just today's weather. So am I worried about the next headline shock crashing the market? No, not even a little. Actually, I look forward to it. I keep cash on the side for those moments because I have a long-term outlook on the market. We've seen it before and we'll see it again, but my house is still standing. And if you want to know how to build your own brick house, drop the comment brick house below or download our Big Bad Wolf case study at the link below. Please subscribe for more. Remember, stay grounded, and above all, don't worry about it because you know I'm not.